Hey guys, this is Shay with Financial Journey. Happy Tuesday. Today we are talking about long-term care insurance. All right, so what is long-term care insurance? Well, long-term care is essentially, pretty self-explanatory. It's if you need care in your older years for an extended period of time, right? It doesn't have to be in a nursing home. It can be in your home setting. It can also be, an assisted living community. So there's different variations of that. All right, so we'll start with a statistic from the Administration of Community Living. So that statistic is that if you are 65 years old today, there is a 70% chance you are going to need long-term care insurance at some point in your elderly years. So that's a pretty alarming statistic. And guess what? Medicare does not cover long-term care. So a lot of people purchase long-term care insurance for that, okay? And that kicks in after 2 of your 6, they're called ADLs, activities of daily living. If you can't do 2 of the 6 ADLs, then your long-term care insurance kicks in. There's typically an elimination period, 90 days or so. You self-fund up until that point, okay? Those 6 activities of daily living are bathing, dressing, eating, toileting, transferring, continence. Okay, those are the 6. But if memory care is one of the issues that you have, then that trumps the two of 6 ADLs. So it kicks in at that point. All right, so how much does it cost in your area to fund long-term care? Like, it's very expensive. So Genworth, if you go to genworth.com, they have a cost of care calculator. Okay, you can put in your zip code and it's going to tell you, the average home care cost, the average nursing home cost, and the average assisted living cost. So go there, check it out, and then you can see why people sometimes purchase long-term care. All right, there's 2 different types of policies too. Traditional long-term care is where you purchase a policy. Typically a monthly benefit is what you buy with an inflation rider, and it lasts for X number of years. So that particular policy is very expensive and you pay for it annually, monthly, however you choose, until you either go on claim or you die. If you don't use it, you lose it. So because it is expensive, the insurance companies have come out with different types of policies. There's a life insurance hybrid policy now. So what that is you can purchase a life insurance policy and you get a rider that has a long-term care benefit attached to it, okay? So if you don't use it, then your heirs will still get the life insurance proceeds. If you do use it, they get a much smaller amount of life insurance. But the whole point of that particular hybrid policy is to have your long-term care, pool of assets or pool of money to pull from in case you need it. And if you don't, then it can pass on to your heirs. All right, so we talked about costs, very expensive. Some extra tips are make sure that your adult children know that you have a policy, because they're typically the ones they're going to call when you need to file a claim. Like, don't have something happen to you and you're in a hospital, then you have to go to rehab or something like that, and they're, muddling through your drawers and stuff to find a policy. Go ahead and let them know ahead of time. Makes it easier on everybody, and they'll know when to call. Okay, premium increases. This is very important. So because it isn't very expensive, right? The insurance companies can go back to the state and say, hey, we're losing money on this particular policy, so we want to raise the rate of everyone that holds this type of policy. So you will get premium increases if you get the traditional policy, okay? Even the government policies, you're going to get premium increases at some point. They don't happen every year. It depends on the state that you live in and what their policy is. So what you need to know, though, is that when you get a letter saying, hey, here's your options, you can either pay the increased premium or this option or this option, right? And typically the insurance company is going to, say, hey, let's take the inflation off of it because that's your biggest, most expensive benefit. So the thing to know is that the options that they send you in that letter are not the only options available. So you should definitely talk to a professional and let them look at the policy and see what benefit you can dial back on. Maybe your monthly benefit is really high right now and you're like, oh, okay, so it's really high. I go to the Genworth cost of care calculator and I'm like, that's good, more than cover my benefit, right? So you can maybe dial that benefit back and keep the inflation on it versus dropping inflation. So that's one tip. And don't forget, when you're purchasing these policies, you get to choose, the types of benefits that you want as well. So if home care is something you want, then you'll definitely want to make sure that that's in your policy. So if you have any questions, please reach out. You can go to our website, financialjourneyllc.com. And thanks for tuning in today, talking about long-term care insurance. Next week, we're going to talk about HSAs, health savings accounts. Those are really cool. I love them. You can also use those. If you save those up, they can be used for long-term care costs as well. So thanks for tuning in. Until next time.